Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar. Dollar, dollar. Ching, ching, bling, bling.
Hello Adrian and welcome to my channel once again. I hope everybody had a nice weekend and a great weekend. I hope you guys woke up very early this morning. Some of you probably did. Well, I did. I think I woke up around 6 o'clock and then catch the CME pre-market action. It was very eventful. It was a very nice weekly candle close for both the CME chart as well as the for the Bitcoin chart, not for the CME chart. It was the start of the CME chart, the start of the weekly. So we have quite a lot to go through, but let's start first with what is going on in this world. So let's see what our numbers are for today. Wow, so we are at 555,000 people for the US. So that number keeps going up pretty fast on a daily basis. It seems like Europe has been a little bit, oh, I clicked something. Europe has been slowing down a little bit. Well, slowing down is still pretty bad, like 1,000 cases on a daily basis. So yeah, let's check how it looks on the chart. Here we go. Let's refresh them, see. Oh, and as you can see here, like I've been telling you guys since the last couple of days, we can see that it has been flattening. You know, you can see here from here to here. That was the 12th of April to today. We have yeah, like a 10,000, 11,000 people, which is the curve is actually starting to flatten. So US, yep, it's starting to curl over. Spain, not just yet. Italy, not just yet. France, starting to curl down, cross over a little bit. UK is still pretty bad. But yeah, overall in the whole world, things are starting to look a little bit better. So I hope, let's just hope it stays that way, of course. Right. Anyways, so let's go back to our chart for today. Let's go to Bitcoin. So that's our daily chart. Perfect. So yesterday, well, let's go to our 4-hour chart. Yesterday, I told you guys that most likely we will still have our bump up towards somewhere what I expected around the 7.1k level, which is targeted here with my green box, as you can see here. So I told you guys that most likely we'll still have a leg up, and after that we could potentially have a very big rejection down towards you can see here my first support line, and I told you guys most likely if we break that line, we have our next support line at 6.4k. So yeah, pretty much what I told came through, and it happened like I told you guys what happened. So we've been on a very good roll so far, where we had our 6.750 correct and around 7.1k rejection correct. Obviously this is not going to be like that every day, and I'll be wrong quite sufficient amount of times, so let's put it like that. But I mean, we're on a very good track record right now, and let's see what is going to happen in the next couple of days, or what I'm thinking it's going to happen in the next few days. But before we go that, I wanted to do more like a macro analysis, which is the weekly chart, right? So let's go to our weekly chart first. Okay, this is our weekly, I think. Yeah, this is our weekly. So this is our weekly close candle, and we are going to talk about our closing candle yesterday. So this is the candle that we're talking about, right? So this candle here that has like a huge long body here, and that has been rejected down, and it has a very small body, which means that the price went up very high, and then it got rejected all the way down back to here. So when do we have a shooting, what we call a shooting star? Oh, maybe I'll bring you guys the candlestick pattern charts. So we're talking about this pattern here, the shooting star, or the inverted hammer, because if you look at it, both are the same pattern. I mean, it looks exactly the same. So a very long wick on the top and a very small body. So basically the same, exactly the same. So what is the difference? So first of all, for the candlestick to be considered a shooting star, the distance of the highest price from the day and the opening price must be twice as large as the shooting star body. So in short, this body, I mean this wick, has to be at least more than twice the size of the body. So let's go back to our pattern here. As you can see here, this wick is definitely longer than twice the body of this pattern. So what does this pattern mean? This pattern usually means a reversal or a top formation. So if you look at our charts, you can see here we get a couple of green candles, and then we get that shooting star pattern, and then we get a couple of bearish candles. So that's basically what we're seeing. What we're seeing right now, we have an uptrend, 1, 2, 3, and then we have that shooting star candle, and then most likely, if this pattern works out, we will have a continuation or a reversal pattern towards the downside. So this is, as a matter of fact, a shooting star pattern. So I hope that you guys kind of are learning slowly with me as well the candle patterns. So what is the difference between a shooting star pattern and an inverted hammer pattern? Because both of them look exactly the same. Well, the difference is really the uptrend or the downtrend. So when we have an uptrend and then we have this pattern, this is called a shooting star pattern. This is a bearish reversal. But when we have an inverted hammer, we have a downtrend, then we have that pattern that we've just seen, and then we reverse and we go into an uptrend. So the body or the formation of the candle is exactly the same, but the difference is the momentum. So when the price is in an uptrend and then it reverts down, it's called a shooting star. And when the price is going down, but then we have an inverted hammer, it can have a reversal and go back up. So basically that was the answer for today. So since that we have most likely a shooting star pattern, we should be thinking about the next couple of weeks, to be fair, because this is a weekly candle pattern. The next couple of weeks, most likely we will have continuation to the down part. And what happens is most likely it always comes back to the reversal of the mean. That's what I said. That's basically what usually happens. And then what does that mean? Well, I'm looking at this the EMA 200 and the moving average 200, the weekly moving average. Currently, the EMA 200 is at 5,473 and the moving average is at 5,655. So what I'm thinking is, and over the past 3-4 weeks, most likely eventually it will slowly go back down towards one of those key support levels. So I'm expecting the price to be going back to around 5.5, 5.6, 5.7, somewhere around there, most likely, and by the end of this month or something like that. Of course, we're gonna have bounces along the way. I'm not like saying like, okay, this is going to go down immediately, but most likely after seeing that reversal or that candle pattern on the weekly close, that's most likely what we're going to see over the next 3-4 weeks. So that's the macro perspective, so the long-term perspective that we can expect. So going back, let's go back to the daily. All right, that's the 4-hour chart. Boom, boom, boom. Where is my daily? Oh, here. We can just take this chart and just put it on the daily. There. So what is going on right now? So yes, So this morning we still closed our candle, as you can see, even though it's a pretty ugly daily candle. We can see that we still are above the moving average, the yellow line, or the EMA 21. So a little bit the same thing is going on as yesterday. We still have a chance to make a little bit, a push upwards towards our resistance line here, and the same principles apply. If we manage to break through this zone, we can still go one leg up higher, and if we break through that leg up higher, we can still go to that ultimate short position here around this green box. But of course, the longer it takes, like I said, the longer it takes, the less chance that we will get there. Now, how does it look on the short term time? You can see here, like as you can see, once yesterday when we hit here and we got rejected, we broke back down here, and then now a lot of resistance is forming around here. So although I do believe that most likely we will have, of course, a little pushback up. So if we make a Fibonacci retracement here from this top here to this bottom, we can see here that the golden pocket ratio is around 6,938. We can see that our yellow line or moving average is around 6,900. So I don't think we'll get all the way here, but somewhere between 6,800 to 6,900 ish, something like that, seems very, very plausible. So what I'm going to do is basically move my green box down here. So because this is now our new critical area and our new critical position. All right, so around this spot here. So what I'm looking forward is either price can make a pushback up here, and then we can move our box. We will target a next box up around our previous resistance here, which is around 7.350, like I've told you guys before. And if we get rejected from this spot, like I said, very, very likely we will be touching, and that actually has the highest probability. We will be touching this 6.4K line today or tomorrow. So what I'm looking at is the following. Are we going to get rejected from this important box right here? Most likely we are. If we get rejected there, I do think that we have more continuation down. Most likely from this box, we'll go down to around this box here by tomorrow. That's basically what I'm expecting for what Bitcoin is going to do in the short term. Okay, so let's go into some more different analysis, and let's look at the historical volatility percentile. So I've been talking to you, telling you guys this horizontal, this my words, historical volatility percentile chart is contracting still. So this huge move, although yesterday we did, if you think that was pretty volatile going up, I think how much, when did it go up? Like $300, and then broke down to like $700. So that was like basically $700, $800 move. If you thought that was volatile, well, I don't think you've seen nothing yet, because what this horizontal, when this horizontal volatility percentile breaks, then you will see like a really big move. Like most likely I'm talking about like over $1,000 move. So that's basically what, as a trader, what you are going to be looking forward for, to play those kind of big gigantic moves. And if you can see the timing wise, we can see that this this looks like it's going to be maturing somewhere in this week, most likely. If you can see, I'm thinking, well, until the end of the week, somewhere this week this can happen. So once this goes below like below 10, when the HVP goes below 10, then it's money time, right? Because then we'll definitely have to look for some position, because we kind of know that it's going to be a very volatile, and there's going to be a very, very big move. So that's what I'm waiting for. But until then, of course, we still can make small trades. Looking at the RSI, we can clearly see that the RSI dropped down out of this channel, and it's still actually going down right now, as you can see. So I think we will have support. Maybe let's make a trend line here from this spot here. Wait. Take a trend line here from this spot. So here, so I still think that most likely we will catch another bounce somewhere here, but before we get there, I think we're gonna most likely get a lower low. I mean a lower low in comparison with yesterday. I mean, so let's see, maybe let's see the stocks. Yeah, let's delete this one. So if we look at the stocks, we can also create a trend line here. Oh, actually, for the stocks, it's starting already to hit the bottom of the range. So maybe we'll have a reversal a little bit quicker than I expect. Maybe let's go back. Let's go to our 4-hour chart to see how it's looking there. So I think I draw it on a different chart here. Let's look at this one first. Yeah, right now on the 4-hour, we are trying to cross back up over, so we still have a little bit of a push upwards. Let's see, I think I draw it here. Yeah, I draw it here. Oh, here, yeah. So we have 1, 2, 3 touches here, and now we're trying to get here. Most likely we'll get a rejection. Let's see, something like this trend. So we still have a little bit of space up, I think, forward. Yeah, and stocks are actually curling up, but on the 4-hour, let's see, on the 2-hour starting also to curl up. Let's see, on the 1-hour also still curling up. Yeah, so yeah, everything seems to be in agreement. So in the short term, most likely we'll have a little bit of a push up, a little bit higher. So yeah, I think we'll reach around this area once again. So around the 6.9 to what's that? Yeah, 6.950, something like that. 6.9 to 6.950, and then we'll have to reevaluate if we get rejected. If we get rejected from that point, I definitely expect to 6.4K. So let's look at the expected moves, because we have our ranges quite defined. So if let's see if expected moves allows us to go up very, very high. Let's see. Okay, this is a 12-hour. So our first standard deviation on the top side would be 6,980, which is exactly where our green box is. So for the next 12 hours, most likely if we go up, we'll most likely only be reaching that area. And the downside is we already touched our second standard deviation almost, and our second fully. If we touch it fully, then we'll be reaching 6,472, which is exactly what I've also said in this box as well, right? So it matches. See, as you can see, this is the green box if we touch down. This is the green box if we touch a little bit higher. So that makes total sense for me. I think we will most probably, well, as you can see, everything, the slope of the expected moves is heavily on the downside. However, like I said, on the short term, all the indicators are still showing upward movement. So I wouldn't be surprised that we hit a little bit higher and we go towards like 6,900, 6,950-ish, something like that, before we continue our downtrend. But yeah, like I'm expecting at least within this week that we will be touching the 6.4K rather sooner than later. That's basically what I am expecting. Yeah. Okay, so let's go over to let's go to our SPX. Yeah, so SPX, I've been looking at the chart for a while, and I've told you guys, whenever we have this bullish cross, usually what happens is we touch the EMA 55 before we get rejected, and this is actually a perfect example. Once again, here you can see that we got 2,820, exactly the EMA 255 on the daily, and now we are getting rejected. So the most important point here is these blue lines, and this blue line, and this yellow line. If tomorrow or within this week we close below this, let's say 2,640, if we close a candle below that, I expect prices, S&P, to go down to this, around this point here, around 2,450. And if that breaks, yeah, I think we will be revisiting our previous lows pretty soon. But of course, this is the S&P, this is stock market, so this can take a while. I don't expect this for now, but for the next coming weeks, this is basically what I'm looking forward. Do we hold this line, yes or no? This important key line here. So if we break this this green box, definitely gonna go lower. So if we see any candle closes, I would even say a 4-hour candle close below that, those two lines, I think it very likely will have a more, yeah, a downward trends. Okay, but for now, I do expect a little bit like sideways movement, but I don't think, I think this is the top for the S&P for now. This looks like a very toppy formation, and this would also match what we've been talking about, our rising wedge pattern. There. So we're just waiting for this to go down a little bit, slide over, and then break down. So I don't think, yeah, I think this week we'll see a lot of markets that will be going down, except for maybe gold. Gold is actually doing still doing really well, and if we look at this pattern, we even can say that it's making a perfect making a perfect V shape here. Just looking at the monthly close, oh, look at this is a beautiful monthly close. Although I do think that we might go down a little bit in the short term, right now. I would say maybe a regression to like back to this point here, 1650-ish, something like that, like a small retracement. That's definitely possible, but overall I think gold is going to like this previous high, I think, yeah, like 1750 to 1800 even. Yeah, I think gold looks very good. Definitely way more bullish on gold than on anything else, to be honest. Yeah. Anyways, something that's very interesting to talk about is the gold futures. So this is the gold futures chart. You can see that gold futures is already at 1742, meaning that, you know, people are just it's very bullish. People just want more and more gold, but this is paper gold, right? So it's basically you get a paper and you get on the note that you own, for example, one gold bar, but it's paper gold. It's not real gold. It's not physical gold. And if you look at the trading volume that has been traded over the past couple of months, it has been really insane, the volume that has been traded. And a lot of people are actually very worried about this because paper gold is not the same as physical gold. So if all the people who have a certificate of paper gold go and collect their actual physical gold, we will have a major gold problem, because I'm pretty sure that there has been too much gold paper being traded in terms of real gold, I mean. So if you are interested in getting gold or buying gold, I definitely would recommend getting I mean, that's what I would do, getting physical gold and not trade for gold futures or paper gold, because you know, one of those companies can just go bankrupt if suddenly 10,000 people come and claim for their gold and want their physical gold. So I think you should be very careful about that. But once again, that's just my opinion. I'm not a financial advisor, so this is not financial advice. You still do what you want with your own money. But that's something to be very concerned about, to be honest, because at one point, like I said, people will be wanting more and more physical gold, or you know, want to protect their money, and yeah, if there's not enough gold in their physical gold, then we're gonna have a big problem. So let's go to our Binance. Let's go to our Chinese traders. Let's see how they're doing and what the positions are at. Let's go to the open interest, and we can see here that the short account has been steadily increasing. See, we are already at 57% versus 43 for the top traders. So they have been increasing their shorting positions, and we can also see that they have been lowering their long positions. So that's a very interesting, I mean, a normal trend, but that's very interesting. For me, that also shows to me that most top traders are thinking that that was a top formation, and that we have a reversal, or else they wouldn't be closing their longs, right? So I still do think in the short term that we will most likely, you know, go a little bit up, maybe retest this green box here once again, and then make a, you know, sadly enough, make a drop, most likely towards 6,400-ish area. So that's basically what I'm expecting for tomorrow. Can you see? Okay, here, let's go to our CME chart. Okay, so for our CME chart, like I said, we never had a bullish cross, and you can clearly see here our yellow line got rejected immediately when the market opened. And very interesting to see is, as you can see here, horizontal volatility percent spiked up. So that also meant, and this is on the 4-hour chart, that we would have a very big move, and that's a perfect, right? I mean, it's I told you guys yesterday we will most likely get a very big move when CME would be opening, and this is what happened. Let's go onto the daily chart. And right now, what I'm looking forward to is this, basically this orange line here, which is my moving average, my 10 moving average, and to see if today, after today, if we are able to close above this orange line or not. So if we manage to close above that 10 moving line, moving average, I still think that we will have, you know, more sideways movements and more contracting, and around this price where we're currently at, you know, 6.7 ish, right? Yeah, 6.8 ish. Oh yeah, let's see what the difference price is. The difference between spot and, well, it's like $100, so it's quite a lot. Yep, you can see. Oh, you can see it's getting rejected already at this previous resistance line. I don't think. Yeah, maybe that this top was it. You know, near the green box. That could have been it. And we're already going to the 6.4K level. It's very possible as well. But okay, let's draw. Let's go back to our CME chart. What I'm saying is, so yeah, this is what I'm looking at. If we either close above this moving average 10 or not. So if we don't close above that moving average 10, for sure we will have a continuation of our downward trend. If we able to close above it, then I still see like 1 more day or 2 more days of like sideways movement, and then we'll drop. So, but eventually this looks like that it's going to drop either way. So I'm pretty confident that will be dropping very, very shortly. Okay. So what I've been talking to you guys about was this pattern. So if we would have reached that green box, I removed it now, then this would be something like a bear flag. Let's try it a little bit better, like here, up here. So it would be something like this, like a bear flag. And then if we do a measured move from this top here until here, let's make a small measured move. As you can see here, if we touch the breakdown, that would somewhere, well, maybe we'll go, it will hit back up a little bit. It basically, the measured move is around that 6.4k level, like I've been looking at and telling you guys, right? So yeah, this just looks like it wants to touch 6.4k. And actually, if we look at this, the pattern that we're forming right now, it's actually very, very similar. We are forming another bear flag. And if we take the top here, and from here, this pole, and we make a measured move here, and let's say we get rejected from this point here, as you can see. Yep, 6.4k, guys. So yeah. It looks like it just wants to break down there and touch that line, and once we hit this line, most likely we'll get another bounce back up. But that's basically what I'm expecting for today, tomorrow.